Hey guys, and welcome back to another video on the channel. If you're new, my name is Brandon. As always, we do have our Investing Academy. You can click that below for courses and training. But if I look a little bit crazy right now, I always look a little bit crazy, but if I look extra crazy, it's because we just got back from a 10-hour trip, road trip from Banff. Beautiful, beautiful place. If you haven't been, or you haven't been recently, I hadn't gone since I was a young, little boy. Holy smokes, some of the lakes there were just spectacular. And I had a bit of a sad story. This video that you're watching today, I actually tried filming it with a beautiful backdrop. I was in front of a nice big mountain, went through the entire video, and I forgot to press record. I was doing it on my iPhone anyway, so maybe it wouldn't have been the best. So I figure I'll just run it back. This is a quick video for 2 stocks to buy right now. Our series where we do a Canadian stock and a US stock. I know there's a good chunk of people out there that think you gotta be crazy to be buying stocks right now. People think you're an idiot if you're buying stocks. And if that's you, this is probably not the best video for you. Suit yourself. I always like to look at the options and find good businesses to own over the long term. Hopefully we'll highlight 2 in this video. We'll go ahead and start with our Canadian pick. It's a company that doesn't get much coverage on YouTube. We do talk about it here on the channel often. It is the company Power Corp, ticker POW. And this is a really cool dividend stock. It's a way of playing the financial sector outside of the banks. And Power Corp is the parent company. I won't blame you if you don't know them, but they do have a very diverse range of companies under their umbrella. This ranges from asset management to the investing side of things, insurance. A couple of the big names you'll probably recognize are Great-West Life, major insurance company here in Canada. IGM Financial is another big one. They actually own Mackenzie Investments, one of the mutual fund companies you very well may own in your portfolio if you work with the bank. And of course, Wealthsimple. This was one of the new exciting acquisitions that the company took place in actually quite recently. They do own this company under their umbrella, and not that it matters to many of you really, but recently, this goes back in February, they did have a bit of a restructuring. So they had previously owned about 2/3 of Power Financial, which was its own independently traded stock. They have taken the ownership there to 100%. And that's why when you take a look at Power Corp, which is the parent company that we're looking at today, we are seeing the really nice juicy dividend that Power Financial used to boast. And not to beat a dead horse, because I know for our current viewers, we have covered this company a couple of times, but I really do find it a fascinating way to play the financial space, to kind of get these unique angles without taking the direct exposure of going out and buying a Great-West Life, for example. You can take the angle of taking on Power Corp and get exposure to Great-West Life along with so many other companies. And again, we did just actually name a couple of them there. But overall, why I think this is a good stock to buy for the long term is obviously COVID has had a crazy impact on almost every company out there. This company as well. We've seen a decrease in AUM. We've seen a decrease in the assets. If we take a look at their recent quarter, of course, like anyone else, they are seeing a hit. That said, because they're an asset manager, because for the most part they have fees, or they're a fee-based revenue model, they collect fees on their investments, fees on the money they're managing. This does tend to stay pretty consistent. It's not like they have to go close their doors like the next company that we're going to be talking about, where, Disney, for example, they literally can't have customers coming through the doors. Power Corp is still able to generate a pretty good stream of cash flow, although, not as much as optimal, not as much as ideal. It's just a bonus that they're still able to collect fees and charge premiums on a lot of the money out there, although it is declining. And one of the areas that, of course, is a key metric for Power Corp now is their dividend. That's why a lot of people invest in this company. This is from their Q1 earnings report. This goes back about a month now, May 15th. Dividend increase, they announced a quarterly dividend, which was an increase of 10% on a year-over-year basis. So a great company historically at growing the dividend. It's of course worth mentioning that this period ended March 31st, so not the full grunt of COVID by any means. But if we do take a look at just their history, 13 consecutive years of increases, doing this at a very, very respectable rate at 6 to 7%. just exactly what you look for when it comes to a dividend stock, which is why Power Financial, in my opinion, has been such an awesome option over the years. That said, going forward, as with many companies, and I'm saying this video after video after video, there is still a lot up in the air as to how much this coronavirus is going to impact companies' abilities to pay out their dividend. And I'd like to say as much as possible that I think Power Financial or Power Corp is a company that can sustain these dividends, but it's also something that I can't say with absolute certainty. It's a tough thing to say when you look at the severity of what we're going through without the Q2 numbers being posted. I like to think it is, but it's not 100%. And that is really one of the risks that you face when investing during a time like now, during an uncertain company. But overall, I do love the quality of this business. Again, you're getting exposure to a ton of great names that I think are going to be around here for the long term. So even if we were to see a dividend cut, I believe wholeheartedly that it would be a temporary one. And at these current levels, stock is trading at a PE of about 10, which to me is looking quite attractive. You can see a bit of a drop off here, and we're looking at a 7% yield, which is just juicy, juicy, juicy. Stock trades are $24 Canadian, and Power Corp is the first company to buy for this video. It's our Canadian stock. And moving along to our second stock, which I did actually mention if you caught it there, we're going to be going with the classic Disney, ticker DIS. And I don't think we need to really say too much about Disney in terms of the company, what they do. This is obviously a fan favorite for really any demographic, whether you're young, whether you're old, whether you're a grandpa, whether you're a kid or a teen. Everybody loves Disney. They've got such a respectable brand, such a respectable image that they've built over the years. Clearly, they've been facing a lot of issue with their parks not even being open. A huge aspect of their business just not able to generate generate income. And we've actually seen that in the numbers. The reports for Disney have been nothing pretty to look at. Of course, one of the pieces of news that came out about a month or so ago now, I forget exactly when, Disney went out and cut their dividend, which caught a lot of the investing world by surprise. It definitely caught me out by surprise. It really does go to show the severity of the time that we're going through right now. That said, I do believe that whatever negativity is being shown on Disney, the company right now, although a lot of it is justified, I do see this just being temporary. When we're able to stretch out and look years down the road, I don't see a company like Disney going anywhere anytime soon, except for continuing to get back to normal whenever that is. A very promising way of looking at it, if you want to take an optimistic look, is I saw a report about the Shanghai park. This was back in May. This is over in Asia. Even when they opened at limited capacity, apparently within minutes, the park sold out. People are just waiting to get back in and get on their rides, go out on vacation. It seems like the world is just itching at it. And especially in a place like Florida, people clearly don't care about coronavirus anyways. They just, they're seeing cases spike up left, right, and center. They'd probably go in big groups of whatever. It doesn't even affect them. The demand for Disney, the parks at least, I don't think that's ever going to fade. And it's just a matter of how are they going to implement these reopenings? How are they going to do it in a safe, a proper manner? And then not to mention that is just one aspect of their business. If you take a look at the numbers, again, factoring in this was a March year end, so nothing too crazy. You do see the different revenue segments with the parks absolutely making up a big component, but not the only component. We got media networks, we got the studio entertainment. Obviously, they got their new direct-to-consumer segment that they created, I believe, a year ago now as part of this whole big transformational shift. I don't think it's worth underestimating the power of Disney Plus. At first, personally, as an investor, just someone who watches Disney quite closely, just out of interest's sake, I didn't have the best hopes for Disney Plus. Maybe because it's just not the types of shows that I watch. Wasn't something that excited me all too much. But now that you're seeing the numbers, I believe they currently have about 50 million, over 50 million subscribers. Hulu as well, very strong numbers. It's hard to argue that this move into the streaming marketplace, the streaming segment, was the right move for a company like Disney. And I think that that will provide a major stream of growth going forward. You could even make the argument, I know some people will, that the streaming services like Netflix and Disney Plus and Hulu, they benefit from a time like the quarantine because everyone's at home and they're going to go subscribe to these platforms, watch shows, kind of just stay home and whatnot. But at the end of the day, yeah, could Disney stock drop lower than it is today? Absolutely. As with the rest of the market, if things decide to sell off, that's just kind of what happens. But to me, at any point, if Disney continued to fall, I would just take that as an opportunity to slowly start building up a position in really one of the world's most iconic companies. I do believe that the dividend cut or the dividend suspension is exactly that. It's just a temporary suspension. Things will get back to normal. I think that they are kind of shaped up. Again, parks being kind of the main area. Once those do get back up and running, that's really the main caveat. But around that, preferably streaming, ESPN Plus, Disney Plus, Hulu, I think that is just a fantastic move in terms of cable cutting or cutting the cord there, making the shift to where our society is heading. Stock is currently trading for $109 USD. This is our US stock for the video, of course, is the company Disney. What do you think of my 2 picks for the video? 2 stocks to buy right now. Again, this is the second time me filming this video, the second run around. So if you did enjoy and you like the picks, if you appreciate the video, feel free to give this one a thumbs up. That is just the best way of showing your support for the channel. If you're not subscribed, you can hit that subscribe button because we post this video. We've been posting this video pretty randomly, kind of whenever I find a couple stocks that I want to talk about. We do post a lot of other content and a lot of other videos. You can go check out the channel. We do, of course, have our Investing Academy. If you are a beginner here in Canada and you want help training courses for beginners, just with anything, getting started, getting your portfolio built up, you can click the first link down below. We got a community that you get to join. It's super awesome. But yeah, let me know what stocks you guys are looking at the moment. You can leave a comment down below. I appreciate you all tuning in. I hope everyone's staying safe, and I'll see you in the next